67.3p. Right, let's get an early look at what to expect at the open on our markets. Stan Shamu joins us from IG Markets in Melbourne now. Stan, good to see you there. What are the opening calls then that you have for the local market open?
Morning, Bridie. Well, I mean, obviously, in light of all the events from overnight, it does seem like the US dollar bulls have really asserted themselves. We did see across all the major crosses the US dollar come back. Obviously, it had struggled over the past few weeks. There had been obviously anticipation of some sort of action from the Fed following recent economic data. But obviously, with the Fed failing to deliver this time around and essentially buying themselves another 2 months before this September meeting, where a lot of analysts are now feeling that's where we'll see some action, we do think we will see a slightly weaker open after obviously most risk assets erased gains following that FOMC meeting. We do have a current call of about 4258, which is down about 0.2% from yesterday's close. It doesn't look like much at a glance, but from the highs of this overnight session, which was around 4277, that represents about a 0.5% drop. So it's not too positive, I suppose, but at least markets seem to be relatively stable. Looking across at some of the sectors, particularly from the resources front, we've got BHP pointing down about 0.2%, which is at around 31.63 for an opening price. It's not too bad, but I suppose with the US dollar reasserting itself, we could start seeing commodities struggle. Obviously, they generally struggle with US dollar strength. And in the Asian session, we could see the base metals and the precious metals struggle there. We did see gold as well fall through 1600, currently hanging around that level, but you can really tell that it's under pressure following the Fed decision and obviously what it means for the US dollar.
Just looking ahead, I guess, do you think that it will be a pretty cautious day again, given that everyone's waiting to see what the ECB does?
Well, at the moment, it looks like it's shaping up for a relatively flat, sort of sidelined session. But it's important to note as well that the expectations for the ECB have been ramped up that much that everyone's starting to feel that the only way is negative. They will disappoint. We also note that the only major move they can make at the moment is reactivating the S&P. But whether that's enough to appease investors with expectations running sky high at the moment, it's really difficult to see that happening. As a result, most traders out there are still quite bearish on the euro. Obviously, we saw it fall below 123 yesterday, down to, I think, 122.19. So it certainly is under pressure. It broke through a short-term uptrend line, which is quite negative, and this drop in risk sentiment can also be seen across the other risk currencies. We saw the Aussie dollar also give up significant ground. I think it was around 1.052 yesterday, came back down to about 1.044. So it does really seem like at the moment a lot of investors are happy to be on the sidelines. There's a lot of caution ahead of the ECB meeting.
I guess just looking locally at what might impact trade, we do have some local data. We've got retail sales and some trade data out. I mean, do you think that's going to have any impact at all? I guess it is kind of closely watched for rate expectations, isn't it? So I guess could that affect the ways the Aussie dollar might trade today?
Yeah, it could have an impact or a bearing on the Aussie dollar, particularly obviously the retail stocks out there, the Harvey Normans, the JB Hi-Fis, David Jones and Harvey Norman. But from a macro perspective, it does seem like all eyes are on Europe. Even yesterday we had China PMI numbers that came in slightly below expectation, but it did seem like everyone's looking ahead to the ECB meeting to see what they can come up with. So at the end of the day, I think that's the main issue at the moment. We could possibly see some positioning ahead of the ECB decision, but I don't think the local data will influence trade that much.
Just on the ECB, I mean, you were mentioning there that obviously the expectations are for a reactivation of that security markets program, SMP, the bond buying there. But, I mean, that's not a done deal either, is it? I mean, there's been hints of German opposition still to that, reviving that program.
Yeah, absolutely. We've heard from officials at the Bundesbank. They're coming out with several comments. It does seem like there's still a lot of internal politics they need to rectify before they can even come up with a unified solution. So I think a lot of market participants are certainly losing confidence in the situation, and until we actually get a definitive solution out of there, it's likely that we'll continue to see the euro under pressure and continue to trade heavy.
All right, great to get your thoughts, Stan. Look forward to chatting to you throughout the day. Thanks so much.
Cheers, Bridie.
Stan Shamu there from IG Markets in Melbourne.